What's going on, guys? This is your boy Azam with INVESTOFY, and in today's video, we're going to discuss if the correction is done, or are we headed into a stock market crash, or what's happening right now. So we're going to discuss that and what are certain strategies that you can apply at this time for, best with your investments. Before we get started, just know that this is all for educational purposes and nothing else. Please do your own due diligence and do talk to a financial advisor. Sadly, I'm not a financial advisor, but I try to do what I'm personally doing and share that with you guys. So, okay, let's just dive right into it. On Finviz, I just want to show you through half of the day, we saw this huge decline happening in NASDAQ. It was down by like over 2% at one point, 2.5%. And now by the end of the day, by the end of the week, we see all greens. Tech is back in the greens, everything's green except Tesla over here, which I do personally believe is a highly overvalued company currently. So what happened here, right? And the stock market news live, stocks research ending a 3-session losing streak after strong jobs report. And what you need to understand is, why did we even have this drop in the first place? And that was because of the yield, the inflation rates rising. And why does that impact stocks, right? Well, it doesn't impact every stock. It impacts more of the growth companies that I personally invest in, right? Because these companies tend to borrow more money than companies that are more blue chip, more, dividend players, because they need to grow. And if the yield is going higher, that means that they'll probably have to pay higher interest rates. And those concerns led to this huge short selling of these stocks from their higher highs. And we've seen some big stocks, big players lose like 30, 40%. I personally lost over 25% on a lot of different investments I'd done, right? Wiping out all, the NASDAQ 2021 returns have all been wiped out. And so, that's what's going on. But the positive jobs news has really surged back up the stocks, especially NASDAQ, which pulled back up by over 4.8% by the end of the day. So it was a huge push from that point. So let's just take a look at S&P 500. Again, we see it ended up in the positive. I still think that it's at a support level. It might continue to drop, get into the 360 range, or it might start consolidating in this range before it starts continuing going back up. But that might be a few weeks from now, right? NASDAQ, right? We saw this positive 4.86% return. Like the low was 135.57, and then it pushes back up to 144.70 and closes up 4.86%. So already NASDAQ is mainly growth tech stocks. It's been in the upward movement, and I think that it's probably going to do the same in this region. It's creating like a consolidation. The last few weeks, you can see over here, has just been in this range. So it's going to continue to break above 145.83. And once it does that, we can anticipate it to go higher, and along with it, take the tech stocks with it. So that's that. Personally, people say that, the news about the economy opening back up and people going back to work is impacting all these work from home stocks. As someone who's in the tech industry himself, no, that's not going to happen. In fact, I believe that in 10 years from now, it's going to be more of a norm to work remotely from work, and maybe once a month or twice a month, just go into the office for work. I'm already seeing that. So that's not a concern. Plus, the companies that we invest in are usually poised for great returns in the long run, right? It's never about the short run for me. I've never seen great returns ever. And case in point, look at Bitcoin. It went from being pennies on the dollars to now worth over 50,000, but that happened over 10, 12 years. So that's the mindset with anything that's going to be successful. Will take a few years. You have to be patient. So one of the stocks that I do want to look at is Apple. How did Apple react to all of this? One thing that I look at is that Apple has this at 120, and between 120 and 102, 103. Apple has this support level, in my opinion, right? And right now it's in that support level. And if we go to the daily chart, we start to see it has this kind of a doji candle. And usually if you see a doji candle on a support level where Apple is, it's a positive sign that the stock has over the next few days or couple of weeks, it's going to start pushing back up and continue to go up. So I believe that this is the support level that it's not going to break. It might still trickle down a little bit more over the next week or so. Because here's the other thing with stocks. If a crash ends, right, it's not right away that the stock is going to start shooting back up. No, no, no. It's like physics. If it's an athlete who runs really, really fast, well, for him, he'll have to slow down in between eventually during the race, and then he'll go and run fast again. And same thing with stocks. Like once they, for instance, take a look over here at Apple, right? It had this huge, uptrend move, and then for a few days it dropped, and then it kind of just consolidated for a few days and then pops, right? Same thing. It pulled back over here after this uptrend move. It came down into this support level. It consolidated before moving up. Consolidated, moves up. So that's the same thing that's going to continue to happen. Stocks don't just constantly go up. They're not parabolic. That happens very rarely, and that's usually called penny stocks, right? So that's that. So is the crash over, or is the correction over? Is there a crash coming? I don't know. I personally don't know. But what I have been doing, what I've been telling our subscribers in INVESTOFY is very simple. We have been selling stocks, right? Because they are hitting our stop losses, unfortunately. So we have to stick to our rules, right? So we are selling stocks. Personally, I'm holding quite a few of them, even though they've hit the stop losses, because I'm actually getting excited that they're getting to those levels. And that is because I'm buying more of those, right? Like for instance, Jumia is a stock that we sent to our alert, we sent out as a free alert, and it hit. But again, see, it's creating that doji today. So I think it's a great buy. You could put a stop loss at 24.5, or if you just are a long-term investor, don't care, then just put it at like 11.5, right? And just hold on to this. I personally think that this stock is just getting started. It's at 3.3 billion. I can see this in a few years being 10 times this market cap. So there's huge potential because of an emerging market, the industry it's in, and the platform approach that they're taking to internet retail. They're trying to become the Amazon of Africa. So that's an example of, which hit our stop loss. But hey, I am still buying into it more. I'm getting more excited about it. That's my approach. And that is an approach also called dollar cost averaging, right? And for instance, let's just say we take the stock Apple, for instance, right? Your initial amount is $1,000, right? And then each month you're putting in $100 into it, whether it goes up, whether it goes down, whether the stock crashes, right? And they show you, if you did that from the beginning of March 2016 to 2021, you can calculate your returns right here. And basically your amount invested would have been $6,000 over those 60 months, $100 each month. And your returns would have been 21,299.57. Because dollar cost averaging, this is the growth. And that's the approach that one should take with investing. My job personally is I love looking at stocks. I love looking, like figuring out their stories, like their data. Is there potential in this? Do they have a moat, or are they going to have a competitive advantage? And then I invest in them. I try to look for the cheapest value on those. And if they drop, I get even more excited. I'm like, okay, unfortunately, I'm losing money right now, but you know what? I'm going to put more into it because I genuinely believe in these companies for the long run. And if you have that mindset, right, and you're not investing money that you're comfortable with having short-term losses in, then this thing works. Then this is when it happens. Like you'll have these dips, right? You'll have these dips, but then you'll have moves, and then it'll pull back, and then it'll go up, and then it'll pull back, right? You can look at the markets, and actually let's do something here, right? Let's go from 2016 6 March to 2010. And let's get an idea of what happened during that time. If someone was buying that, see, your investment would have been 4,800. Despite the crash, and you can see this crash, especially in the 2009, the stock skyrocketed after that. And if you continued with just that $100 each month, right, you would have made over $13,000, right, on a $4,800 investment. And that's the kind of stocks I find out for you guys. And that's the mindset you need to have, because look around you. People still have their jobs. Companies are still growing, right? Businesses are still moving, depending on the industries that you're looking at, right? So nothing's changed really much, except that there was just fear in the market, and there was a sector rotation where we saw oil and gas and commodities get more, and these value stocks get more of the cash inflows because of the fears of inflation. And that always happens with growth stocks. But in the long run, it's the growth stocks. I think Apple is a growth stock company that continues to do exceptionally well. So I hope that this video helps you guys, that it gives you an idea of, how to gauge this, right? You have a few options. You can do dollar cost averaging like I am doing, or, you can just get out. You can just hold on to your cash and be like, okay, I'm just going to wait for this, and I'm going to buy it at the cheapest price possible, at the lowest price when the market hits. And here's the fact about that. You don't know what's going to be the lowest price. Maybe it was today, and then maybe it's going to pull back up, or maybe it's going to continue going down. You just don't know. So one of the best strategies is dollar cost averaging from that point of view, by just looking at the numbers and the data. So I hope that this video helps you guys. If it does, please please subscribe to the channel, and share it with others who might benefit from this. And don't forget to get your free stocks from Webull in the description below. Also sign up for our free newsletter at sendfox.com/investify. And you'll get free stock alerts from us weekly. Once again, guys, thank you so much. This is your boy Azam with INVESTOFY. Have a great evening. Take care. Goodbye.